I have something to ask you. If you had paid the equivalent of about $40,000 today for a single tulip bulb in Amsterdam in 1637, what would you think? Would you call the person who did that a fool? Wait, don't say yes right away, because that person, contrary to what you might assume, was neither naive nor ignorant. He was one of the most educated, experienced, and knowledgeable merchants of his time, and for that moment, he was making a perfectly rational decision. Because everyone around him was doing the same thing. Why? Prices were rising every single day. The tulip was no longer just a flower. It represented a new asset class. And this time, something truly different seemed to be happening. This exotic flower, brought from the Ottoman Empire, was a status symbol. Its supply was limited, but demand was endless, and the market had begun to price that in. That's exactly why the person you might be tempted to call a fool would say this to you. You weren't there. You didn't breathe that air. You didn't open the newspaper that morning and see prices rising again. You didn't hear the excitement of merchants in those coffee houses. And yes, right here lies the greatest secret of financial bubbles. From the outside, bubbles look ridiculously obvious. But when you're inside them, truly inside, they don't feel like bubbles. They feel like the greatest opportunity in history. I'm not going to tell you why bubbles burst. You already know that. Instead, I'm going to tell you why they never feel like bubbles. And that is a much darker, much more personal story. Because this is a story about how humanity's collective mind can shut down, how rationality can turn into a social illusion, and how doubt can be quietly eliminated. Now that you roughly understand the situation, put yourself in the place of that merchant in 1637 and think about how comfortable you would feel. Then put yourself in the shoes of a crypto investor in 2021, a dot-com engineer in 1999, or a Florida homebuyer in 2006, and ask yourself whether you still feel that same comfort. History makes us think it teaches us about bubbles, but in reality, it only teaches us about past bubbles. Future bubbles always wear different clothes, and every time we look at those clothes and say, "This is not a bubble, this is real." Why? Because the human brain did not evolve to stand alone. It evolved to conform with the crowd. Throughout history, separating from the group meant death. And this instinct still operates the same way on Wall Street, in Istanbul, in Tokyo, in Dubai. Believing what the majority believes feels safe. Going against the majority makes you feel like a fool. That's why when John Maynard Keynes said, "The market can remain irrational longer than you can remain solvent," he wasn't talking about mathematics. He was talking about psychology, about social pressure, about the very nature of existence. Now come with me to 1929. Just weeks before the crash, one of the most respected economists of the time, Irving Fisher, said, "Stock prices have reached what looks like a permanently high plateau." When he said this, he was looking at data, corporate profits, productivity, technological transformation, and everything seemed logical. Because the 1920s truly were an extraordinary period of growth. Electricity was spreading, the automobile industry had exploded, and radio was revolutionizing communication. So where did Fisher go wrong? It wasn't the data. He went wrong by eliminating doubt from the context. And the moment you eliminate doubt, you enter the most dangerous phase of the market. Because doubt is the immune system of the system. Without it, everything becomes vulnerable to infection. If we go to Silicon Valley in the late 1990s, we hear some of the smartest people saying, "This time is truly different. The internet is changing everything." And they were right. The internet did change everything. But valuing a company at 100 times its worth before it even made a profit was something else entirely. The problem was not the internet. At that time, not investing in a company meant falling behind. not understanding technology, not seeing the future. And who wants to be someone who cannot see the future? Who wants to say, I don't understand? This is exactly where the bubble grows, inside that shame. Because a bubble is not primarily about an asset, it is about identity. We want to say, I understand too, I see it too, I am part of this train. And that desire pushes numbers into the background. Now let me tell you about 2008, but not in the usual way. Because the story is often told as one of greedy bankers and naive buyers. But that story is too simple and wrong. The real tragedy of 2008 was this. Many people inside the system were aware of the risks, but there was no mechanism to stop the system. Because if everyone took one more step, they won. And if you didn't take that step, you fell behind everyone else. Economists call this rational herd behavior, decisions that are individually rational but collectively destructive. Some analysts at Goldman Sachs saw the mortgage market deteriorating as early as 2006. Some even discussed it internally. But the system didn't stop. Because competitors didn't stop. Because investors didn't complain. Because commissions were still flowing. Being inside a bubble is like trying to cross a river. The current drags you along, everyone around you is swimming, and they look at you and ask, why are you stopping? Meanwhile, those trying to warn you from the other side cannot make themselves heard, because the water is too loud. Now let's step back and talk not just about markets, but about the philosophy of bubbles. At the center of every bubble, there is a truth. Tulips were truly beautiful. The internet was truly revolutionary. Real estate was truly valuable. A bubble does not invent reality, it distorts it. That's why it is so dangerous. Because when you criticize it, you can be told, you just don't see the reality. And the line between criticism and ignorance becomes blurred. So what happens when a bubble bursts? People are genuinely surprised. Not pretending, but truly surprised. Because until that moment, everything made sense. Everything had an explanation. Every new peak had a justification. That's why the question, how did we not see it, repeats throughout history. We didn't miss it because we didn't want to see it. We missed it because seeing it had become almost impossible. Because to doubt, you need both courage and a willingness to pay a social price. John Kenneth Galbraith writes in his book about the Great Crash. The defining trait of speculative periods is confusing financial genius with wealth. The person who makes money becomes the one who understands, and the person who questions becomes the one who doesn't understand. This dynamic is the strongest building block of a bubble. Winners speak, skeptics stay silent. So here is the question. Today, right now, what idea requires the most courage to question? Which asset class makes you feel the most foolish to criticize? Which narrative carries a social cost if you oppose it? At the intersection of those questions, somewhere, something may or may not be inflating. I don't know. You don't know. No one knows. But at the very least, the question should be asked. At the very least, doubt should not be eliminated. Because when doubt disappears, markets are at their most dangerous. This is not a prediction. It is an observation distilled from thousands of years of history. From Tulip Mania to the South Sea bubble. From 1929 to 2000. From 2008 to today. No one can predict which bubble will burst. But one thing can be said. Before every burst, skeptics were silenced. People said, "This time is different," and excitement overtook analysis. And as you watch this video, you might be thinking, okay, but I'm different. I can see it. I'm careful. Maybe you're right. But the merchant in 1637 thought the same. So did Irving Fisher in 1929. So did that engineer in 1999. This video is not meant to spread fear. Markets sometimes rise, and those rises are real. This video is not meant to make you paranoid. Not every rising asset is a bubble. This video is here to remind you of one thing. If your doubt is still there, if you're still questioning, if you're still uncomfortable, this is not a weakness. It is your strongest protection. And if one day everyone around you agrees, everyone looks in the same direction, and everyone says, "This time is truly different," then stop. Take a breath and ask yourself, why should this time be any different?
If you find this video interesting, please like and subscribe to discover more.